Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. It is the man, the myth, the legend is back with us once again. We missed Brad over the last couple of weeks, so Joe did a great job filling in for him. We're gonna get into the dirt of this cattle market, even look at it from a pork perspective, as we all know some issues happening there in Iowa. But new highs for June cattle. That's what we're gonna dive in to this week's Cattle Call. And of course, welcome back, Brad.
Thanks for having me on. Yeah, I was waiting for an update, right? You could have picked a better one. I knew I should. Yeah, thanks for having me on. I was, last week I was at a ICA, Iowa Cattlemen's meeting in Des Moines, and the week before I was goofing off.
Which skiing. Is allowed.
Yeah, I hope so. Market, interesting market for an old timer here in. Okay, so last week, Friday, right? Cash was better. Everybody's enthusiastic. The market's trading great. We burst into new highs for the move, and then all of a sudden the balloon pops and we close lower. And you go home Friday going like, son of a gun. You don't suppose, market tops the day the news is the best. And we have a reversal down, much like the way often cattle markets top and bottom. So then we, plow into this week. Well, they tried to break it Monday. April came back to steady. June was lower. Yesterday, the market came back pretty good. And now it feels more like, okay, you tried to break it and we couldn't. We took a couple of punches, but you can't knock us out. I'm certain, I can't say that. I would guess that you're probably seeing a pretty significant round of fund buying. The funds have some longs on, but nowhere near an adult portion of it on. And the way they're plowing into the June today on the last day of the roll, it looks, very, very encouraging. I don't know what else we could do to look better here. $2 higher, making new highs for the move. Great technical action for sure.
So as we're recording this on a midweek, many guys are probably wondering, okay, Brad, can this market go higher though?
Well, the short answer to that is yes. And honestly, I'm struggling with the timing of it. I had been more of a fourth quarter. That's when we're going to go to 200, go to a place we've never been before. I'm inclined to still think that, but one has to be very, very impressed with this action here. Now, we've talked over and over about this, but I was struggling with, so I'm a fundamentalist, okay? But obviously, I understand technicals. You have to, otherwise you get run over. But fundamentals still, at the end of the day, I think make a difference. So you remember October, November cattle on feed reports showed us this big placement in September and October. Like, oh no, and that, remember, it triggered a $30 sell-off, right? We all of a sudden went from, shucks, we got 2% more cattle on feed for the first quarter. We thought we had less. And just busted this thing. We're supposed to have 2% more in the first quarter. And okay, it is year-to-date slaughter, checking my notes, 5.6% less year-to-date. It's March 13. We've got 2 weeks left of this quarter, and we've killed 5.6% less. I mean, you want to talk about missing a 3-pound chicken by 5 pounds. I mean, either the USDA is so far off on this placement number, and there are plenty of people at the USDA like, they're not bad people, but come on, or have you backed up all these cattle? Have this kill slowdowns, has the bad weather in January, is the fact that the futures are a premium to cash, is the fact that the feeder cattle are high and corn is cheap, and so I worry that the weights are going up at a time when they almost always go down. So I do think we're losing a little currentness. Now, that didn't have to be bearish today, and clearly it's not, but if you want to fast forward something 30 days down the road, maybe you want to go like, oh yeah, I remember we talked about whether we were staying current or not. So let's stay current. This thing will stay a lot better, a lot longer, as long as we can stay current. But there are a few little, yellow flags out there that make me want to be just a little bit careful here.
So could that mean that maybe we're starting to keep some heifers back? Possibly.
I gotta believe that that's happening now.
Okay.
Now, as of January 1, it wasn't. In fact, we had a record number of heifers on feed as of January 1. So we're only down the road here 2.5 months. And it's not the time of year necessarily where the rancher makes that decision exactly, right? That's more of a fall deal. But I guess let's assume that that's the phase of this cattle cycle, which is the longest drawdown cycle ever, um, and um, uh, and assume that we're going to start to enter into that tightness phase here. At least that would be my guess. I don't know. We'll know a whole lot more here in 6 months to see what the guys are really doing.
So, how does a feeder, as they look at all the different factors, whether it's political or financial, weighing in on this market trade, consumer? We know the CPI index came out. How does a cattle feeder look at this and focus on moving forward at this point?
Yeah, man, Susan, that is a great question. Preface this by the cattle guy is the toughest, most stubborn, most independent. That's why I love him. Gutsy. But this is no time for the faint of heart here. I mean, I've fed cattle for almost 50 years. I don't remember a time where you had this kind of a high interest rate, extremely high break even, extremely high priced replacement cost for feeder cattle. And based on the supply structure of the market, I would say it should be okay, from a supply structure. But hey, we've all gone through September 11. We've gone through COVID. We've gone through a plant closing, okay, spoiler alert. There's always something that can go wrong, so you worry now about the politics of the moment, right? Elections forever away. I wish it was tomorrow. Is that going to impact us? Would that potential election cycle trigger more of a recessionary type perspective? Maybe, I don't know. To me, the fact that the stock market goes up every day, there's more to the economy than whether the stock market's going up, it would seem to me.
There's so many factors that weigh in. And I mean, obviously, feed costs are going to be something they're going to be looking at. And are we going to move out of this drought? Is that going to be a potential concern as well?
Funny you bring it up. We talked about it this morning early with in the office here, just thinking like, well, let's see if it rains this time. They got it forecast again, and it doesn't really feel like it. I mean, it's odd. There's a guy planting corn here at Sioux Center yesterday. I mean, nuts on the 12th of March. I don't know that will work, but it makes you worry about it. And more so from the standpoint of what that means to your earlier question about heifer retention and stuff like that. So I don't know. It's early. Let's not get all weirded out about what can happen. I guess you got to be impressed with the demand yet, though. I mean, not to make something up here about bad demand. Box beef has never been this high this time of year, other than the COVID year. Never. We're about, it was 284 a year ago today, and now it's at 308 on box beef. So we're going to start to go into that good demand period here, right? Grilling season, Mother's Day, etc. So I'm not going to sit here and say that, oh no, demand's no good. I don't feel that way at all. Demand's been really good.
All right, as we wrap up this week's edition, let's talk about Perry, Iowa, and the closing of the Tyson plant. Granted, it was for hogs, but we did have some cattle guys that are concerned. Does this kind of set the tone moving forward?
Well, hopefully not, but there's enough of us cattle guys that have a long enough memory of other times that's happened. Most notably Plainview, Texas, and then before that, Denison, Iowa, close to me, and so that we're all sitting here wondering, okay, so how long? So right now the Packers just slowing the kill down. Some of them are not killing on Fridays. Some of them are killing 32 hours a week because their margins are poor. Okay, they have to pay more than they want to for live cattle. That's what a bull market's like. But if it does get down to the point where the supply is tight enough, then you've got too much capacity and something will happen. Now, I don't see that today. I don't see that really even in the short term. But I do wonder if we say get down the road a year, and we are in the full-fledged of the expansion phase where there is significantly less heifers in the feed yard, whether or not something like that could happen. I don't know. We'll do our best to try to pay attention, but usually those kinds of things happen like a thief in the night. Hopefully we don't have to think about that for a long time. The Perry deal was curious to me. The market doesn't even react. Hog futures were higher yesterday and not modestly lower today. So apparently the hog guys don't seem to care much about it.
All right, great addition. Welcome back. What's the best way for folks to get a hold of you?
kkbtrading.com. You can listen to this and whatever else we've talked about lately, or 712-722-0023.
All right, that has been this week's Cattle Call. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call on the Rural Radio Network.